Hello and good morning, everybody. Hope you had a good weekend. I'm Ethan Feller from Zacks Investment Research, and this is Momentum Mondays. Per usual, we are going to take a look at all of the happenings in the market today. First, we're going to look at the economic calendar and see all the major data releases that we have coming this week and next week. Then after that, we're going to take a look at the earnings calendar, and we have a few major companies reporting this week. Earnings season really begins in earnest this week. Then we're going to take a look at the technical picture, look at the charts, and then I'm going to share a few technical trading setups in stocks with top Zacks ranks. So looking ahead this week, first half of the week is fairly light in terms of economic data. Monday morning, we have U.S. leading economic indicators, which isn't usually a market-moving event. However, also at 10 a.m. today, we're going to get data out of Europe. The ECB is going to be, European Central Bank is going to be having their interest rate policy meeting. They're unlikely to change policy stance. We're going to leave interest rates unchanged. But what they say at the meeting is going to be highly scrutinized. People are going to look closely at it. You have some mixed data coming out of Europe. Some places have rising inflation. You see in Germany, they have slowing growth, probably going to have a small recession this year. So it'll be interesting to see what comes out of that meeting. So by the time this video comes out, we'll see what happens at April. Tuesday, we got no data. Wednesday, you got PMI, services and manufacturing. Then Thursday, we got Q4 preliminary GDP. It's pretty important. So Q3 was estimated at 4.9%, massive annual growth rate. Then now Q4 is estimated at just 1.7%. So a pretty significant slowdown from Q3 to Q4. And, it's going to be really important. Growth is really critical to the interest rate story. And, I got a few more things to share regarding interest rates. So, and then of course, always jobless claims are important. Again, we saw, really strong numbers last week from jobless claims. We went below 200,000, just 187,000 initial jobless claims last week. The estimates are only for 200,000 this week. So, I've been saying it week after week. We're watching jobless claims. It still just hovers around 200,000. I mean, it's an important indicator on where the labor market is and where the broader economy is going. And it just remains robust. I mean, the economy remains robust, especially the labor market, very tight. And it's really important for interest rate policy in the States where, as long as there's a strong economy, it's going to be harder for the Fed to lower rates because, the economy is strong. There's no pressure. And you don't want to overheat the economy and potentially risk inflation rising again. But again, I'll get into that. A few other data. We got durable goods, trade balance, new home sales. But mostly we got GDP preliminary. And then Friday, we got PCE inflation. Two major numbers. Inflation is the Fed's preferred. PCE is the Fed's preferred measure of inflation. Critical to the policy going forward. And then looking forward to next week, next Wednesday, we got the Fed interest rate policy meeting. So a lot of this is leading up to next week. We got a quiet period, so the Fed speakers can't say anything. So, yeah, big week next week. And sorry, give me one sec. So, yes, all right, talking interest rates. We got, so interest rates, okay, there's no expectations for Fed to do anything at the next meeting in January, next week. However, part of what really allowed the market to move so much higher over the last month, right? We saw from last November, the market just rocketed higher, okay? And a big part of that was these expectations for the Fed to start cutting rates aggressively, okay? So at the last meeting, the Fed said, we're going to cut rates 3 times in 2024. The market got a little bit ahead of themselves, and I've been saying this over and over. All of a sudden, they started pricing in 6 cuts, okay? So everyone got really excited. Rate cuts, more liquidity, market's going to rally. And look what it did. I mean, the S&P broke out to all-time highs last week, okay? But like I said last week, we had really strong labor job numbers. We had a slightly hot inflation number, just slightly, but it, okay? So we can see here, the March meeting, it was the likely scenario last week, okay? And now it's only a 44% chance. So the market is starting to say, we're not going to hike in March. And this is a big deal. This is going to have an effect on the market in the coming weeks. Okay, so we got the March meeting, and we see, okay, well, just a week ago, the odds that the Fed was going to cut rates was 77%. And now it's only 44%. So the market is pricing in more hawkish Fed policy. You got a strong economy. The Fed has more flexibility. They don't have to cut rates so quick because the data is still good. But it might have an effect on stocks. So this is very live. It's happening right now. And I think next week, Fed policy meeting is a big deal. We're going to, if they're like, we're not even thinking about cutting rates still, these expectations are going to change dramatically. And, so now we're pricing in the first rate cut in May, right? We'll see. We're going to see. Maybe they, like the Fed says, we only get 3 cuts. Maybe it's the last 3 meetings. Maybe it's not until September and November and December. So if the market starts pricing in a more hawkish Fed data, stocks are going to be a little bit more at risk. I mean, after such a big move higher, we've barely ticked down in the last 3 months. So you're going to have to watch out a little bit. All right. So now let's get into the technical setups. So last week, we looked at this consolidation in the S&P. We said maybe it trades sideways and breaks out, and that's what happened. S&P broke out. We made all-time highs. This line here is the former all-time highs. And yeah, I mean, it's just a clean momentum breakout. All right, NASDAQ, even stronger. Really strong. I mean, this move Friday was pretty impressive. Now I'm just waiting for the drawings to load. There we go. So we had noted this ascending wedge breakdown at the beginning of the year. And I said, kind of a bad omen. Now, the market didn't really care, all right? It pushed to new highs. I'll say it didn't retest this sort of channel here, but I'm not sure how significant this line is anymore, to be honest. So, this week, the market's going to be pricing in earnings. And so we'll see how that shakes up the market. Again, I think, earnings, they'll be important this week. But again, I think the real change is not going to happen until Wednesday. Actually, let's take a quick look at earnings. We forgot to do that. Sorry. All right. Monday, you got United Airlines. Starts out slow this week. Brown & Brown, those are the 2 major ones. Tuesday earnings. Start out Johnson & Johnson, Procter & Gamble, Netflix, Verizon, Texas Instrument. It's a real mix this week. You got some consumer discretionary or consumer staples, some tech, lots of semiconductors. You got Lockheed Martin, 3M. Then on Wednesday, Tesla. It's a big one. ASML Holdings, another semiconductor. ServiceNow, you got software, IBM, tech, AT&T. Another semiconductor here, LRCX, Lam Research. Then on Thursday, you got Visa, Louis Vuitton, Intel, Union Pacific, Nextera Energy. So you got some important earnings. The major big tech names, you only got Tesla so far this week, but it's definitely getting started. American Express on Friday. So these all could definitely have an effect on the market. So we got the setup in the broad market. Just taking a quick look at my notes, sorry. Okay, also worth noting last week, semiconductors just absolutely smashed higher. NVIDIA, nearing $600 a share. Hit these drawings to load. But this is not something I want to jump into right now. This is extremely extended, and I think the broader market, I was looking at the NASDAQ, is pretty extended as well. Another big semi mover was SMCI. Again, these are just parabolic moves, and they're not. I wouldn't really touch them. I mean, you don't need to short them. I think it's way too extended to go long. If you are long, that's fantastic. You can hold it or maybe take some profits here. But semiconductors have been in a long run, and I'm not keen on jumping into them right now. So this it's an interesting scenario. But again, I think we got some headwinds ahead. Obviously stocks at new highs. It's hard to argue with that. But when I share my trading setups, you'll see I have a mix of sort of stocks that'll benefit if the market continues like this, and I have some defensive names that should do well if we do have some more challenging activity. Another stock I wanted to look at from last week, Tesla. It's getting hammered. Just really not doing well. It sort of started when news from the Chinese electric vehicle manufacturer BYD had overtaken it in quarterly sales. And, Tesla is an enigma, and I don't have really strong opinions. I mean, it's a good company, but I don't know. It's an important stock, and it's down pretty significantly, so just something worth note. Another one I want to look at is the oil market. Oil has been sort of consolidating at these lows. I definitely have a bullish lean into oil. We're seeing strong economy, and you're seeing some mixed data in terms of supply for oil. We're seeing increasing supply, but these drawings can load. See the trading setup I have here. Well, okay, here we go. So we got, we have this channel here. We're above the channel. We got this consolidation. I think highly likely we see a breakout above this level here, 74, and we move towards this $80 level. So with a strong economy, I think it's highly likely we see this breakout in oil and an approach to 80. So it should obviously be good for oil stocks, which have had sort of a hard time over the last few months. So just another development worth watching. And final broad market I want to look at for the trading setups is Bitcoin. Obviously, Bitcoin been on a fantastic run over the last year, but I think there's some near-term risks here. I've highlighted this level. We're now below it, so no, I don't have a strong opinion, really strong opinion. I think risk assets have some risk going forward, and Bitcoin sort of just trades with stocks, so I think it's possible we see a move lower here, sort of already breaking down. I'm not really keen on shorting Bitcoin because it really goes up very fast. I wouldn't recommend anyone shorting Bitcoin, but maybe if we get a move down here, could be a buying opportunity, maybe even down into 30, 30, 35 areas, probably the first, 36 would be the first, and then down to 30s, but we'll see. Could just as easily, break down and just reverse right back above 40. So, but, if you see it close below 40 without reversing hard, I think, you see some further movement lower. And I'm also going to share a Bitcoin setup. So let's get into trading setups. So like I said, I have two sort of growth-oriented, technology-oriented stocks that should do really well if the stock market just continues to power higher. Then I have two setups that should do better if stocks get shaky, if there's some volatility, rising uncertainty. And then I have one that's going to be a Bitcoin-related trade. So I will get started with that. So the first one is Pinterest. Pinterest has been a really good stock I'm watching very closely. It's rare that you get to buy these, technology, online businesses. I mean, these online businesses have really good margins, good business models. We can see Pinterest has earnings over the next 3 to 5 years are expected to grow almost 36% annually. It's got a very fair forward earnings multiple of just 28.5 times. We see it's got Zacks rank 1, and I think this together just is a really good. It's a good company. They got 500 million monthly active users and nice growth. I just think Pinterest is a really good stock. I've had my eye on it for a while, and I'll show you the trade setup. So we can see, gosh, taking a long time to load. We got a little consolidation here, a breakout, consolidation here. There we go. Breakout, and again, Pinterest is building out bigger, broader consolidation. And yeah, I think Pinterest above $38, and it's going to make another new high. You can actually even look at it like this, sort of just saw this. It's sort of already broken out from this kind of mini channel. So, it's already getting pretty bullish. We've broken out. Got an inside candle here. We're already trading, so it's past 9:30, and we're above the inside candle. Yeah, above 38, this one I think is ready to go, so long as the market holds up. Okay, so that's Pinterest. And the next growthy stock we got is Shopify. Shopify, of course, it's the infrastructure website builder for e-commerce companies. Got a Zacks rank 1, of course. Not a fair, not a reasonable valuation. Almost 77 times forward earnings. But again, with these growth stocks, they just go up if the market goes up, and it's got good sales growth as well at Shopify. You can see 24% sales growth are expected this year, almost 20% next year. That is steady and sturdy. Earnings too. Look at this. Earnings are supposed to go from 4 cents last year to 70 cents this year. That's a 1,600% increase. And the next year, solid 50% increase. So Shopify, another good stock. Great company. And we got the technical setup. Oh, look at that. It's breaking out. Show you the setup. Yep. So we got this nice bull flag here. Okay. We gapped up, moving higher. Okay. It looks like stocks want to move higher this week. So Shopify, that's a breakout. Okay. So if you're looking to add growth stocks, Shopify has had a clean breakout above $80. You could just buy it now and ride it. You'll want to set a stop down here, 78, 78.50. There's possible, we fill this gap and then trade higher too. So this is a good one. Shopify has a clean setup. And again, all of this pending on the stock market stays strong over the next few weeks. But if the market goes up broadly, Shopify, this is going to be a big winner. And it really helps to have that Zacks rank 1. Okay, so those are the more higher risk trading setups. So now I'm going to show you two more defensive stocks. So the first one is Novo Nordisk. This is a pharmaceutical company. They benefited massively over the last year. They had GLP-1, which is like the weight loss and obesity treatment, formerly diabetes treatment, now used to help people lose weight. It's been a huge trend. It's changed many markets. And so it also, it's got that growth sort of factor that it's got this great new product, but pharma, healthcare, it tends to act as a defensive stock as well, defensive industry as well, because people's sales, sales of healthcare is not very, it stays steady, whether the economy is good or bad. People need their healthcare. So typically, if the stock market sells off, healthcare sells off less or even does well. So over Nordisk, we got this Zacks rank 1. It's got nice earnings per share growth estimates, fairly reasonable forward earnings multiple, 32 times. And yeah, it's got a lot going for it. This GLP-1 trend is it's a massive trend. It's like the pharma version of AI. So this should be a tailwind for this industry for a long time. And also, I saw last week that Regeneron, another major pharmaceutical company, is coming out with a complementary drug to aid in the treatment of these GLP-1 weight loss drugs. One of the issues with these drugs is that although they make you lose weight, and they make you lose some muscle as well, which is very good for you. And this new drug from Regeneron ideally will help maintain the muscle mass. So the treatment is only getting better. And let's take a look at this stock. Yeah, we can see that gone up a lot over this last year. GLP-1 has been fantastic, bullish tailwind for the stock. And yeah, it's just hanging out right near the all-time highs. I don't know why these drawings are taking so long to load, but we can see there we go. We got a nice bullish consolidation. We want to watch these levels of support around 105.75, we'll call it. You don't want to see a breakdown below there. Sometimes you see these stocks that build consolidations, it break down, and then by the end of the day, it's back in the consolidation. That's usually a good sign. And, if you see that, you see a breakdown and reversal, sort of like, this reversal kind of candle off the support. You can, you call that like a pocket pivot. You can pick it up here and then catch it and then catch the breakout. You can set your stop below the low of the wick, if it makes a reversal like that. But most people, they just trade the breakouts. So if Novo Nordisk does trade above $108, that would signal a breakout, and I would not be surprised to see the stock trade to new highs. So Novo Nordisk, good one. Merck. This is the other defensive name I want to show you. This does not have a Zacks rank 1, it has a Zacks rank 3, so it has mixed earnings revisions. But again, I was looking for defensive stocks that had really good trading setups. So Merck is still a good company. It's got good earnings per share, growth estimates, forward earnings multiple of just 14 times. So it's got a very reasonable valuation. And what really drew me to it was the trading setup, which is really clean. And again, I have this sort of defensive thing in the back of my head, Sure, I'll own growth stocks, I'll own Shopify and Pinterest, but I also want to own something like Merck, which, as we can see this morning, is breaking out nicely. And it's breaking out from the trading setup that I identified. So it's above $119.25. That is a breakout. So long as we close above this level and we don't reverse back, that is, it's good to go. This is actually an all-time high right here. So above 120, and this stock is, when stocks make new all-time highs, they usually draw in even more buyers. So this is a clean one. This is a really good setup. Tight consolidation, sideways action, breakout. Market is worth watching, definitely. And finally, I want to show the Bitcoin setup. I know we covered a lot today. Stick with me. We got Coinbase, okay? It's got a Zacks rank 2. We saw Bitcoin has sold off a good amount, but Coinbase has a really, really cool trading setup that I want to show you. So we all know Coinbase. It's the leading Bitcoin and crypto brokerage firm for the average person and for institutions. Yeah, it's got. So, like I said, Bitcoin kind of looks like it's going to break out, but it also could just reverse and trade higher. I mean, Bitcoin is a squirrely asset, and Coinbase also does all kind of crazy things. So, if you're looking to add some exposure to Bitcoin and cryptocurrency, you got this can be a cool trading setup. This is kind of descending wedge, and it's broken out here. We can see we got this reversal on Friday, and above 125, and this thing could just go. I mean, look how it moved from 76 to 190 when Bitcoin rallied in the last quarter of last year, at the beginning of this year. So it's taking a hard correction. I mean, it's traded up from 190 down to 120. And of course, you got to manage these positions based on the high volatility. So you don't want to load up this thing, but wow, look at it going. So 2.8% already this morning. So this one again, I mean, these stocks are already breaking out. So that is the last setup for today. Thank you everybody for watching. I know we covered a lot today, but I hope I didn't lose you. There's a lot of interesting things going on in the markets, so I hope this was valuable for you. If you like content, definitely subscribe to Zacks' YouTube channel. And if you want even more from Zacks, sign up in the promotion in the description below, or just go to zacks.com/promo. Thanks.